All right, welcome back. We want to take you now to Wall Street. The stocks, they're up this morning after stocks closed lower, giving up early gains yesterday. So joining us to discuss, Doug Flynn, certified financial planner, and John Browne, former advisor to President Trump and Margaret Thatcher. Good to see both of you this morning. Hey, Doug, we'll start with you. Can you help us digest what's happening with the markets right now?
Yeah, the markets are taking all of the positive news that and looking forward with respect to getting through this and getting some good information on vaccines and other things that are working. And it's discounting some of the negative information that's coming through and trying to look past that, because that's what the market does. It anticipates maybe 3 to 6 months ahead of whatever is coming along the line. So that's why it's positive. It's looking to the third and fourth quarter and saying, hey, we're going to get on the other side, and off we can go from there.
Okay, so you say it's looking ahead to third and fourth quarter, but we just got information from the first quarter today about GDP and how our U.S. economy actually shrank at a 4.8% annual rate in the first quarter. This is not counting all of what we're dealing with right now amidst coronavirus. That's going to be in the second quarter response. So, John, where are we going to see those numbers come July?
Well, the Congressional Budget Office reckons that the U.S. economy will shrink by 40%. It was only 9% in the 2009 crisis. So this is a very, very serious thing. And as Doug said, we're only just seeing the beginning of it. By July, we'll be starting to see a full quarter coming up, and I think it's going to be pretty horrific. And that's why the Fed and the government are taking such exceptional, massive steps to ensure liquidity and to protect small businesses in particular and the economy in general.
Yeah, but, you know, we've seen how we've wiped out all of this economic gain, it seems like almost overnight, of course, because of the coronavirus pandemic, something we couldn't have predicted here. Doug, how long will it take for us to recover?
Well, it's interesting because if you think about January of 2019, so a year and 4 months ago, if I would have said to most people, hey, we're going to have a great year, we're going to give it all back, we're going to go through the worst pandemic of our lifetime, but we're going to be 15% higher in the market, you probably wouldn't have believed me, as most people wouldn't, but that's where we sit today. Now, listen, we're 15% from an all-time high that we reached in February. I do think the market's gotten a little bit ahead of itself because of the negative earnings that are going to come out here. So you're going to need to see things snap back in the third and fourth quarter. Things like delayed house purchases. People pulled their houses off the market. They're still going to get sold. They're just delayed. We need to see that happen.
All right. Well, we've got those numbers right now, at least from March. We want to share with them to you right now. Take a look at this number. The number of contracts signed, they sank 20.8% last month, according to the National Association of Realtors, the lowest level since May of 2011. John, are we going to continue seeing this trend as well, with this number just dropping?
I'm not sure about it. I mean, I think what we've had is, of course, as Doug said, buyers and sellers are cautious. And at Illustrated Properties, where I am, we've seen some sellers much more cautious than before. And of course, the move to a virtual world, it's a personal world, real estate. And it's had to go virtual overnight. We now do all our showings of houses virtually. There are all electronic signatures. In fact, even to closing, there are only 2 people that have to sign physically, and that's with social distancing. So basically, the whole industry has gone virtual, and that takes time. And, you know, we're the largest privately owned firm in Florida, a real estate firm in Florida. So we see a great deal of this, and that's what we're seeing. As far as the economy is and the market's concerned, I'm afraid I'm a little more bearish than Doug. I think, you know, people are being drawn in for the very reasons he's given. But I think the picture down the road is going to be nothing short of horrific. And that's going to bring a major downturn in the markets. And people can, at the moment, go into very sound, high return on investment companies, but hedge by selling covered puts and also buying ETFs that are short the market, sometimes twice short, sometimes 3 times short, so as to protect themselves on the downside, which I think is going to be A, very sudden, and B, very dramatic. I mean, the statistics so far show that this recession is coming faster and deeper than the great crash of the 29 and 1930s. And therefore, I think the results will be much more severe.
Yeah. All right, guys, we got to go. But it's great talking to you both. Doug Flynn, John Browne, guys, thanks so much.